We do expect them to continue into next year. We see VC valuations up across the board, whether you look at US or Europe, early or late stage, and across sectors as well. There are a couple of key trends behind this phenomenon. First, I would point to tourist investors or crossover investors in the space that may not be they may be valuation agnostic in some ways and may not be as sensitive to pricing. And second is just a bit of performance chasing. We've seen incredible performance from VC as an asset class in the last few years, and a lot of investors want in on those gains.
Well, on that note about being price agnostic, I mean, it's been pretty extraordinary, some of the deal values, the valuations we've been seeing come out of VC. And I think anybody who watches this space will know that the entrance of SoftBank and Tiger Global in particular have really jacked up the prices and caused this, wave of appreciation. Is that going to continue? Can it continue if we do start to see rates rise in the U.S. and this search for yield potentially begin to dissipate?
Well, I think it can continue insofar as the broader market cycle continues. If we start to see a slide in public equities, for example, we could see valuations come back down in the VC and private equity space, as well as private market investors tend to take their cues from public markets. But I think it remains to be seen, how far we can run with this current cycle. Many of us industry observers thought that valuations were high 5 or 6 years ago, which really are nothing compared to where they are today.